Hello traders, welcome back. My name is Hornsey, market analyst for YouTrading, and today I'll be taking a look at the dollar versus the Japanese yen. So I'm going to start on the YouTrading.com Forex heat map, and we can see that the dollar here is turning green across the board. It's still weak against the Aussie, the Canadian, and the yuan. The yen is red across the board, so it's weak, and it's comparable to the New Zealand dollar at the moment. So looking for strengthening US dollar versus weakening yen. Right, going to a monthly chart of the dollar versus the yen on the active trader platform. I've marked out this trade range here. So we had a big impulsive move up, a correction, and then ever since that correction, we've been trading sideways. So the highs of the sort of trading range I'm talking about between 2015 and 2016 around 123 to 125 to the upside and around 100 to 101 to the downside. We did have a breakout in March 2021. So we had the big pullback in 2020, then breakouts of that range in 2021. We're now above the midpoint of this trading range that I've been talking about, basically making bullish moves to the upside. Going to the weekly, see here, we had the sort of start of this channel. So we have 1, 2, at least 3 points, breakout, retest, continuation to the upside. We are making impulsive moves higher, then smaller corrections and another impulsive move. We're now in a corrective phase. So I'm looking for a breakout to the upside. Go to the daily chart, see it a little bit better. We've got this rising trend line in green. That's the sort of line in the sand for the bulls as far as I'm concerned. Obviously, we want to stick above the 113 because that means, we're on average doing better than we have done for several years. There is a possibility that we take out this double bottom, come back down, test old resistance, see if it is acting as support. So if the 113 does sort of stop being support, we could come back down and test the 111. So what's been driving the dollar versus the yen higher? Well, as far as I'm concerned, especially from the summer until just recent, we had rising US 10-year yields here in blue dashed line. Then we also had rising oil futures in the orange, and that was sort of dragging the dollar versus the yen higher. So the dollar was appreciating because interest rate expectations were rising as inflation was rising. Inflation was rising because the price of oil was rising based on this reflation trade and monetary policy. So it was only up until November that we were up on all three assets, and then end of November the price of oil come down, the 10-year yields have come down, but the dollar versus the yen has remained high. Today we've got US CPI, and we've been sort of foreshadowed that there will be basically a high CPI reading, which won't take into account this drop in the energy prices. The Fed, as far as we can all make out, are going to taper faster so they can get to the point of a liftoff where they'll raise rates sooner. And if they sort of signal that based on FOMC meeting next week and today's reading in CPI is higher, then we could see the 10-year yield here in blue rise. That would then probably translate to a stronger dollar, and that would push the dollar yen further. If, however, we get a surprise to the downside, maybe CPI comes in a lot lower than expected and it doesn't include this drop in the oil prices, then we might actually see this double bottom break on the dollar versus yen. So at the moment, I am actually looking, like I said, for a break higher. But, we are starting to, if I just go to a candlestick chart, we did break structure back here. So we had this impulsive move, then a correction, then another impulsive move, and then a deeper correction. Took out the liquidity here, back inside. So ideally, if we are to go higher on the data today and next week, then I want to see prices go up, come back down, test this sort of level here. We sort of see it as like a shelf sort of forming, and then take out this swing high here. Otherwise, if we can't get back above that swing high, there is a possibility that if you get the Fibonacci retracement tool, that come the 61.8 around 114.50 cents, that could be a potential sort of resistance level that, you know, these traders that broke the structure are looking for. And that's when we sort of see prices turn lower. So I am expecting a push up today. You know, a good 100 pips would be great. Maybe we only get 50, but I'm looking for a push up on the dollar versus yen today. And then whatever happens around this 114 and 50 cents level is, you know, basically how I'm going to sort of trade next week. I'm not going to marry this trade until we start to see bullish structure get formed. Like I said, you know, we did break structure here, but overall the trend is up, and I'm looking for the 113 to hold for as long as possible. I hope that makes sense. It's Friday. Obviously, like I said, there's CPI data out later on today. If you make any money, try and keep it. Go into the weekend happy, and I'll see you next week.